Today's FOMC day, really critical day as far as we're concerned. Plan of action is typical. We don't want to fight the Fed, but prior to the news, we don't want to fight the euro either, right? So ideally, the euro is going to try and profit from the situation, and then when the news comes along, the euro gets slammed, right? So that's the expectancy. That's what typically would happen. That's the higher probability side of things. It's a very low probability that Powell raises rates, right? So it's kind of what we would expect to see, right? So we want to be buying support, and then we want to do so until about uh, 2 p.m. New York time, right? So just before the FOMC news. And then by the time the press release comes along, 30 minutes later, uh, we tend to have a different move to play with, right? So it's one thing at a time, but the plan for the next 4 hours is to be buying support. Okay, so let's find some support. If I look left, right here, right now, I see some on the 1 minute chart, but without jumping the gun, let's just review our entire process. Right, so uh, we look at today compared to yesterday. It's clearly an inside bar, right? We are inside of yesterday's range. As such, we have to assume yesterday's bias, right? So yesterday was a green candle, and today is within it. And so we have to assume today is also just a green candle, right? It's just part of that bigger candle. And so we're going to go with that mindset and look at the 1 hour chart. And so on the 1 hour chart, we want to see in the course of the last 16 hours, why do we want to be bullish? Well, ideally, you look back in the Asia session, you can see it traded slowly, drifting lower. We made the low at the open of Europe, and then we found the high just recently with the last news event, right? So we understand what's happening. We understand we're making higher highs and higher lows. And we can see that here on the 1 hour chart. And if you start to draw your floor and your ceiling, you can start to realize where your risk is. Right. So now with this mindset of ours, thinking we need to be buying support, we're going to be looking inward on a even smaller time frame to see where some of that support might be. Right. So let's see. Right, I'm looking at this right here. All right, so if we can get around here, which is about 7, 8 pips away, right? We'll see that on our 5 minute chart. So let's go down to a 5 minute chart. Right, so now by repeating the same process here, right? You have your floor, you have your ceiling, you have that area of support we've already determined we want to participate at. Within this, there's probably more levels that you can see, right? One where we are right now. Right? So if we break through this or retest of that level would be a buy for us. Right? If we drop slightly lower, somewhere in this zone here would be a place to maybe purchase. Right. And then ultimately we have one more right here. Right. So we're creating this ladder on the 5 minute chart and we're allowing the price to tell us what it's trying to do. Right. We're just reading the price action as it climbs up or down this ladder. Right. And I'm just doing this with my mind's eye. I'm not being picky or fussy about where the lines are. I'm just trying to connect the tops or the bodies together, right? Tops of the wicks, tops of the candles like this, right? So I'm creating this environment in front of me that offers me decision. It's a decision point. Every one of these lines is a decision. I have to make a call. What do I want to do here? And I already did, determined I'm a buyer. And so this right here, that's a level that we may want to buy, expecting maybe a bounce, right? Because of this. So on our 5 minute chart, sorry, on our 1 minute chart, if I use my boxes as a measuring device, I've measured 2 3/4 boxes on the way down. If I assume this move is finished and I start measuring the next leg, I can use my box and realize we've made it one standard deviation away from the low. I'm now expecting a break and looking to move higher. And so, as a buyer of support, I have to be looking left. I see my support right here, and I want to buy that support right there. And so, as a buyer of support, I have a target that's 3 pips away. I have a stop loss that's 36 pips away. And so that offers me a ton of space to fix this trade if my assumption, so if this is not support, right? I'm assuming this is support, hence I took the trade. If my assumption is wrong, I still remain in the box, but I get to try my assumption again, right? I get to assume that maybe this will be support, right, in this area here, right? So I'm already anticipating where I will add more of my cash to, right? I've already determined I'm spending this money either way. I'm just trying to figure out where I need to spend it. This happens to be it right there. Let me just turn up the sound a bit so I can hear better. There we go. Things are muted. All right. So that looks like that was support that we found at that lower level. All right. So we're thinking the euro is going to try and find its way up until the FOMC and the Powell event. Right? And so we do want to be buying the euro at support, preferably on all the way up until about 830, 840, 850, right? So somewhere up here. And then from there, we expect to be sellers of euro, right? So near the high or above the high, as we make a new high, we want to turn into sellers, right? So it's ultimately a matter of time, right? We have to see the price action give us the opportunities to spend our 4 clicks. Right here, right now, I get to spend click number 3 in box number 1, right? I'm still spending my first initial 1% in my first initial box. So that's percent number 1 in box number 1. And I'm doing so as a buyer, right? And the market seems to be falling. So I'm buying as it's falling. I'm buying cheap, right? But we already know it's not falling to the South Pole, right? It's only trying to find support in this jumble mess over here, right? So we're looking left, we're finding what we think might be support. We test our assumption with a couple of dollars, a small trade. And if our assumption is correct, we get a reward. If our assumption is flawed or proven to be flawed, uh, we have a mess to deal with, and we deal with that with boxes 2, 3, and 4, right? And when I say a mess, it's really just drawdown. So it's a different situation, right? You wanted a positive outcome, you ended up with drawdown. So what? It's a fixable outcome. It's not, the end of the world. And at this time of year, in the month of December, a lot of what's happening today and going forward the next few weeks is positioning. A lot of people are catching up, or they have catching up to do. There'll even be some, tax loss selling taking place. So we have a lot of opportunities to experience volatility in the next couple of weeks. I think after Monday coming, there's no more major bank events, right? On Monday, I think we have the Bank of Japan, and then that's it. And so we have today, tomorrow, next week, and That's kind of the end for the year. People are going to start to peel off, right? They're going to disappear for the next 2 or 3 weeks. That's to be expected, leaving us with volatility and a lot of illiquid markets. Right? Marching markets is probably what we're going to encounter more of. So let's take a peek. All right. By repeating the same process every day, we kind of build upon consistency, right? So it's when we start changing the process or changing your approach, your time of day, you're now impeding on that consistency that you're trying to find, right? I don't want to be going into box number 2, right? So I'm keeping an eye on where support is. And this is where my entries are. I have 4 entries to put into the box, right? So I've already used 3 of them. I'm just looking to see where I can spend my 4th one, maybe at the bottom of the box, right? And that's expected. We have to realize we've come down, 2.5 boxes already. And so in my mind, it's unlikely to keep going and going and going, right? Considering we are making higher highs, higher lows, even here, we're making a higher low, right? So I'm thinking we've yet to make a higher high here. Right, so you have to keep in mind we're here for a portion of the day, right? A small, small, small portion, couple hours, if you can. The rest of it, 18 of it, has already been done for us, or 16 of it. I'm only here to do a couple of what's left. And so within that 2 hours, I'm limiting my opportunity for errors by following a process the best that I can, not deviating from it. And by executing with a start time and an end time, I'm trying to manage this experience at the casino, right? I want to make sure I end up the winner before the casino has a chance to take it all back, right? So I'm using the end of my trading session, the end of the 2 hours, you know, to call it quits, to make sure that I don't purposefully overtrade, right? We tend to do that without realizing. We just want that one extra trade, that one extra pip. And usually it's overtime, and you won't end up getting paid for that. You will be paying for working overtime. All right, so we've closed a couple of trades. I'll reopen a trade or two. Oh, and by the way, yesterday's trades, all of our work yesterday closed in profit. Um, there we go. There's one trade that I closed manually this morning because it missed the target by like 1 pip right here. But everything else that we did yesterday closed by itself automatically. Right. So this morning we start again, we do the same thing, right? We are building a position right now. We anticipate this move to last 3 to 4 boxes. So we're participating with the wind in our sails, right? But at some point we do want to be sellers, right? So I'm just telling you ahead of time, buy support until it's time to sell, right? So it's this idea that if we start to sell now, we're going to run out of money boxes ahead of schedule, right? So we have to be buyers right now. We're just buying support. We're not trying to trade the trend. We're just trading what we have in front of us. Yeah. There's always something happening. Right. And so, as far as staying safe, that's priority number one. I'm really not here to make $1 million. I'm here to stay safe and then make money if I can. And so it's where plan B is, it's where plan C is, it's where the alternatives are that keeps me safe, right? But I plan those out ahead of time before I'm forced into here. I'm already looking left to see where my entries will be, right? I'm already anticipating plan B, plan C, plan D if I need it, right? And ultimately, I am looking for a move up, right? So I'm not really, I'm expecting four boxes, whether in my favor or against me. And so if I'm expecting four boxes in my favor, those types of trades are the ones you'll see me take off the target once in a while. Right? That's what we did in our swing trading account, which will be profitable today, I think. Right. So this is it. It's not combining the strategies, but try to keep things separate, and that way you can better manage your money. Right. I'm using the boxes to manage risk, and I'm using inside of the boxes to manage my money. I know how many clicks I'm afforded. Yay, that's awesome. Come on. Right? I don't want to over click my I don't I don't want to spend the money that belongs in this box unless I'm pushed into there. And so the intent here is to see me recycle my trades. So recycle my box one, my four trades, and I want to recycle those trades over and over and over and over. So preferably if I have the wind in my sails, I'll be moving out of this box, closing those trades, and this will become my new box number one, and so on and so on and so on. I just keep recycling box number one. It's when I'm in drawdown, I start building boxes, and I can only build four of them. Right. So drawdown is what we exploit, like we did yesterday. We built a position in drawdown, and it paid off. We're trying to do the same thing here, except if we can have drawdown pay us off in minutes instead of a couple hours, that's even better, right? The risk is time. The longer you're exposed, the more likely something's going to happen to you. That's why we leave the schedule. That's why we leave on time every day. Try to, at least. Right? So there we go. I do want to spend my last click if I can, maybe when we test the inside swing right here. Right, somewhere in this zone here, I would expect a low and a bounce. Anxiety is building up. Right? If it doesn't get to my purple line, that's okay. I have a position built already. Right? I don't need to spend every dime I have. Right? It's the logic that is required. I need to be patient, and I need to click a red candle at support. Right? If I do those three steps, uh, a little bit of patience, the right location, the right color candle, I usually get the right outcome instantly. And so I'm just setting the stage for the probability. I'm trying to guarantee the exit. Right? If I jump the gun and buy this when it's not a red candle, I'm buying expensive stuff. Right? This is cheap. And if I can get to my line down here, it's the cheapest I would expect it to be. Right here. That's as cheap as I would expect this to come. And I'm ready, willing, and able to buy it there. I am actually willing, ready, and able to buy it all the way to the bottom of the box. Right. So in this box, I feel safe. I have a ceiling, I have a floor. I know if I break one or the other, something's happening. Otherwise, I'm expected to stay in this box sideways for the entire hour. Right? That would be a normal move. A break below, abnormal. A break above, abnormal. And abnormal is in context, right? It may be in the direction of the trend. And so it's just a resumption of the trend, right? So it's this thing that if it's in the box, it's sideways. If it's breaking the box, it's trending. I'm not a trend trader. Right, so we're still bouncing around in our box. If it pushes down right around here, I want to buy that. Right, so this idea of trading for just a few pips per day, it's really the consistency that we're seeking. The ability to trade and leave safely, undamaged. That's way more important than trying to outshine everybody else. I'm more into the safety of the account, the safety of my trades, the exiting uh, with little to no pain, right? It's more about managing the losses, so turning drawdown into profit, right? Drawdown is necessary, but we turn it into something profitable. And so it's having a fear of drawdown is a bad thing. It's you have to have a healthy fear of drawdown. Right. So it's this idea of what's healthy. And for me, that's 4%. Right. I'm allowed 4 boxes, 1% per box, and so on and so forth. Yeah. Yeah. So it's, when we're trying to make these widgets, the widgets are supposed to all be the same widgets, right? 3 pips, 3 pips, or whatever your target is. It's the same target day in, day out. Once in a while you see an opportunity and you take it because it's in your blood. That's what we do, right? But that's not part and parcel. That's not a 3 pip trade. Obviously it's a separate thing. It needs to be accounted for separately. It needs to be managed separately. It should not go towards your 4%, 1% per box. And that's kind of borrowing from Peter to pay Paul, right? If you're running two strategies in one book, you have to be aware of where that risk is distributed. Right, so here's those red candles I'm looking to buy. If I can just get one little push down here, I'm a buyer. Right, if I look left, we're testing this area here, which is in line with my expectancy. Perfect, right there. Right, so now I have my 4 clicks. We're testing the inside of that swing, and the next level is the outside swing. Right, so at first I take a trade on the inside. The next I'll be taking a trade on the outside if I'm given the opportunity, and that happens to be the bottom of the box. Right, so it's stacking my trades, but I'm doing it with an expectancy. Right, so this right there is where we would find support typically, and expect a bounce, right? If this is not support, we'll know instantly because we'll be testing the outside of the swing. And if we test the outside of the swing, that could be a double bottom. And so we take that trade just the same. Right? We take it by there just the same because we assume it will bounce. If the bounce fails, then we end up in box number two, and then we start to negotiate in box number two to fix box number one. Right? So it's one thing that leads to the other, and we can't jump the gun. We can't put the cart before the horse. We have to see the facts, act upon the facts, and only take trades that have a probability attached. You know, a low probability trade, you skip over it. And so what we have here is control, right? I'm not panicked. I'm in control of my spending the money. I'm looking to my left. I have clues. I'm executing on the clues, and I'm doing it within a safe space. And I know exactly what to do if I break my safe space, right? If it's a call to action, and I have a call to action on three sides, right? And so the expectancy has to be plan B, plan C, plan D. I put my mind into fixing a problem that may not even be there yet, right? I'm already thinking ahead that what if it doesn't work? What do I need to do? Right? It's almost like I mentioned that yesterday to Logan. It's like we're driving a vehicle with a broken gas gauge, or we're always worried that we're about to run out of gas. Right? So it's always easier to take 3 pips, 3 pips, 3 pips instead of betting that it might go the extra mile because it might not. That trade might be running on fumes. And so take the 3 pips and do it again and do it again and do it again until it is running on fumes and you'll see it. It's running sideways and now it's not moving anymore. Now it's turning over. Right? So we have to have clues. Everything that we see in the past is leaving a clue behind. When we're reviewing that in the future, so when we're looking left from right now, these clues are useful to us, right? These levels here are meaningful and they're just assumptions. And so it's not a sure thing, but it's enough of a thing that it pays. And if you repeat and you do it consistently with the same process, so you're not changing things, you're not changing your target, you're not changing the call to action, right? You do this for a few thousand trades, and then you'll see consistency in your track record, right? So ultimately, it's up to us to understand where we're wrong and refuse to go beyond that level, right? That takes discipline. And for some of us, it takes practice to have that discipline. Like I'm kind of a butterfly. I'm kind of a bumblebee, right? I lack discipline. When it comes to trading, I had to earn it. I had to be taught. And so, yeah, we take losses. And the market does humble people. And it's partly because of our ego. That was my biggest problem. Right, so right around here, if I back down, sorry, to support, I will take a trade. Right? And I still have the same expectancy. I don't want to over click. I just want to recycle. If the market can close one or two, I will open one or two, but not at random, right? I need to see the right color candle at the right location, so on and so forth. Right? The process controls my behavior. 30. All right, so we still have 3.5 hours before the FOMC. And so, and then 30 minutes later, we have the Powell speech. So if you can, buy support until the FOMC, and then take a half-hour break, and then resume trading after the Powell speech. All right. So ultimately, you want to protect the account, not try to win the lottery. All right. So if I can see another red candle here, I'll spend click number 4. All right. Come on. Close these trades so I can click them. Right, so very heavy calendar over the next couple of days, right? So into the end of the week, every central bank on the planet pretty much has something to say for year end. And so there'll be volatility, there'll be all sorts of push and pull. Uh, Create a plan, execute, and then get out, right? Don't push your luck over the next few days. Some heavier traders have already taken off for Christmas. They're done for the year. And so it starts to show when the market moves on flow alone. It's just like a marching market. There's nobody to stop the marching market. So yeah, it's only going to get more and more prominent into next week. All right, so here we are closing some of our trades off of support, right in time for the bottom of the hour. Right, so what have we experienced? A pullback, and so we played the pullback as expected, and now we're going to play into the banker's close through the UK fix. Right, so if we want to be buying support, and we want to do it on red candles. So anybody that's chasing this right now is buying inexpensive. We want to buy cheap. So a red candle somewhere around here, these wicks right there, that would be awesome. Right, and then if I can get down there, I'll click it. I'll click it twice because I have money to spend. I've only got one trade in there. 1, 2. If I go a little bit lower, I can click it again. I have a 4th trade to take. There you go. I took my 4th trade. Right, so now I'm testing this area here, right? Actually, I'll just take this line. I'll just move that here. I'm testing this zone here, right? So I'm hoping that this will support price and that the reaction off of here should be a resumption in that direction. And so I'm assuming support is in this area, right? It's just a zone, it's just an assumption. And I know from experience that I'm wrong a lot. So it's this idea that I don't need to panic. I don't need to, there it is. I don't need to panic or freak out. I just have to have a way out. Like, how do I get out of this? Well, if I'm forced to into box 2, I spend the same amount of money and I can move that white line, which is the average price of all my clicks, right? I can move that white line somewhere where it's within reach. And so essentially, I look to minimize the pain. And just by focusing on the action, the process, I tend to have winning trades within that, small 3-pip trades, and it compensates for the once in a while when I do have to seek a break even trade, right? So the break even loses on one side but wins on the other. And all the while, I've been making 3 pips. I've been collecting change, right? So here's a buying opportunity. I'll put a fifth trade there, right? Just so I can move that line down, right? So now the line is 3.5 pips, 4 pips away, right? And we're testing the inside swing right here. All right, let's see if this holds right in this area. Right, now we would expect this. All right, the 5-minute chart. Remember the ladder we built earlier? Well, we're going sideways. We're not going up the ladder, nor are we going down the ladder. We have been unable to pick a direction. Right? So our action points are still there. We haven't had to take action. Let's get rid of this. All right, so I don't want to spend more money in this box. I'm already 5 clicks in. Right, so I have to get into this box down here to open more. Right, I still have a bullish bias going into the news. Right, so I do want to be selling from higher, somewhere around 830, 840, 850, all the way up here. It's all a big selling zone for me. Right, if we get down to the 660s, if we break the low and go down another 4 boxes, I want to be a buyer down here. Right, so there's opportunities on both sides. You just have to pick which way you want to go. Right, you have to be ready to trade the facts. Right, pick a side, trade that side until you're proven wrong. Right, trade the facts. $8:37, bottom of the hour, just in time. So let's see if it bounces up. I'll get a chance to recycle some of these trades. I do have that bottom one here with a target right there. We've had 1, 2, 3, 4, 5, 6. We've had 7 trades already. 6, 7 trades win. A few more would always be nice. Right? Sometimes when you feel compelled to buy something and you don't have the money to do it with, remove a loser instead. Right? You'll get the same feeling because it'll lighten up your drawdown. Right? Instead of having a winning trade compensate for the drawdown, remove a loser to compensate for the drawdown. Right, let's see if we are presented with box number 2. Same box. Right, there we go. Nice little rejection. See if we can test around here. Lower low on the day. The problem a lot of people will have today is this inside bar, right? Because of the inside bar, the trend is undetermined, right? And so unless you have some kind of a static default, go-to process, in our case, we always assume the bigger bar bias, right? So today's red, but it's inside of a green candle. So we have to assume green is the dominant bias. And so that's just the probability. Beyond that, you have to see the facts, right? So when you look into the daily candle, the facts are supporting this idea. So that kind of helps. And so we also have a limit. We know we're not trying to go to the moon. And so we expect this to be an average day, but we are trying to find the direction, right? Is it average on the way up or average on the way down? And I think the news will be the telltale, right? We're trying to go up until the news comes along, and then we're probably going to go down as a result of the news. And we're looking to participate with the news somewhere around here, right? So I want to be a buyer until there, right? And then with the Powell event, I want to be resuming this, right? So that's today, and that could be Thursday, Friday, right? We just don't know. We have to trade the facts. So when we zoom in hourly, the facts are telling us higher highs, higher lows, and we're trying to find the low so we can go higher again, right? So this has just been moved over here, right? So now we go down to our 5-minute chart, and through the use of our ladder, we can figure out where we need to take action. Or if you want to add to your winners, you're adding to your winners at these levels, right? If you want to be, peeling off, you want to peel off at those levels. And so now with our boxes, our security blanket, nice expectancy, eh? We expected the market to do nothing for an hour, and it did nothing for 55 minutes, 57 minutes. So I think the box is pretty adequate. It's in line with an average market, right on schedule. Let's see what comes next. All right, we don't want to chase this up. So therefore, cheap, buy cheap, a red candle somewhere at support. All right, so this is breaking out. So if it breaks out and it pulls back, it should pull back on the red candle, buy the red candle, buy the pullback. All right, so any kind of rejection up here as a result of this breakout, any kind of a false break, buy it. All right, so we're looking to buy rejection here, some kind of a retest of this break, some kind of, a wick. We don't want to buy the top of this. We want to buy it cheap, right? There it is, rejecting. Boom. Right? All I'm trying to do is guarantee my exit. Right? If I can get the best price on the way in, it speeds up the way out. And as usual, I could be totally wrong and it just comes right back down again. The bars are really small. Strangely, it's not, they're only 2 pips, and it's only an hour into the day, into the cash market. So yeah, people are expecting a big volatile day, and there's a bunch of scaredy cats, and nobody is playing right now. That's okay. Better be safe than sorry. You know, I too kind of am fidgety a bit, expecting this news. The plan is in place. It's the execution, right? From bar to bar, I'm never sure if I need to change my plan, if I need to execute plan B. And so I'm not scared about plan A or B. I'm just trying to figure out which plan do I need at this very moment. And then the flip flopping between the plan becomes a problem, right? So you have to be steadfast. You have to dig your heels in. You have to have confidence in your bias, in your plan A, and then you have to have the conviction to fix whatever deviates from your plan. All right, there's a pullback to get into. Boom. So now I got two, I've got three, and I'll save one for if we go a little bit lower. I'm just trying to move the boxes so I can see the price action a little better. Put this over there. There we go. So any move down here, you know, in this previous area, that would be a good place to buy more. Right? A revisit to the bottom of the box, that would be a good place to buy a little bit more. Right? If we break the top of the box up here, that will force me to move this box. Right? So I intend to stay in box number one. I just want to keep recycling the same 4 or 5 trades over and over and over. And I try to avoid box number two if I can. And that boils down to my bias, right? It boils down to which next move do I perceive, right? I'm trying to play anticipating 12 o'clock. I'm looking forward to the FOMC, and I'm looking to be finished in front of the FOMC, right? So it's ideally bullish until the news, and then we sell the news. Right, so on our 5-minute chart, we're still climbing up the ladder. And if we were to climb up and up and up and up, we're going to need more rungs on here. Right? But over time, you'll come to realize they themselves are about, well, the lines themselves are about 3 pips apart, but the levels that you're looking for are at about 9 pips apart. Right, so these are the same, it's the same behavior we've had day in, day out, day in, day out, day in, day out. It's the same steps. It's the decision at each level that needs to be, you know, uh, reassessed. And then sometimes it's the same answer for multiple levels at a time. So you're stacking your boxes, right? After you've stacked 3 or 4 boxes, like what we expect to do here, we would have probably some kind of a pullback or a reversal of some kind, right? So the boxes set the stage for what's coming next, and you can expect one box at a time, right? So instead of forecasting the weather next week, I'm trying to forecast the weather until the end of my box. That's it. Right? Anything outside the box, that's a new set of questions. It's a new set of behavior. There's a nice 9 pip move right here. All right, a few more minutes. Looks like we have the right direction. Ultimately, the target, the top where I want to turn into a seller would be near the average trading range, so at the ATR, at the daily range. Once we fulfilled an average range, I want to turn into a seller, right around here, and then fulfill the wick as a seller. And hopefully, as a seller, I can find myself into tomorrow, you know, uh, selling resistance. Right. So we're thinking one move ahead. Right. Right now it's going up, but we're already thinking about when we reach the target. Right. The next move, the move ahead. And as I approach this target, I want to start selling. And so that tells me I need to stop buying eventually. Right. So I'm counting my boxes on the way up so that I know when it's time to stop buying and start selling. Right. So I'm just measuring 4 boxes forward or 4 boxes backwards. I need to see a typical market so that I have a typical outcome. Anything atypical calls for a reaction, on my part. So far, so good. We've closed a handful of trades. We should close a few more in the next few minutes. Right? And then, as we've already discussed, we want to be buying support for the next 35, 36 pips or so. So the next, 4 boxes. And then once we get up to box 4 or so of buying, we want to rotate and start selling near the 830, 840, 850 mark. All right, so here's our wins. We traded for about an hour as a group and we closed everything. Doesn't get any better than this. Right? I'm just going to close that one manually, take that 1.8 pips, and wish you guys farewell for today. All right, so you have your plan. We know what to do, right? You want to be buying support on the way up, and then expect 2, 3, maybe 4 boxes, and for sure become a seller if we get up 4 boxes from here, right? So imagine, the end of the day, you're going to be facing Powell, and so Powell typically doesn't budge, and so the reaction from that should be a push back down, and then after the speech, a slow drift back up, right? So it's a chain of events, and understanding what you need to do with each step is the priority here, right? Or stay out. This would be a good place to buy more. All right, we're revisiting the same trade again, second time around. So I just took 3, and I'll see if they close by themselves in just a couple of minutes. I want to click the fourth and the fifth because I may need them down here. 5 more minutes, and then I'll have to let you guys go. So the idea is to expect USD strength to come in with the FOMC and then with Powell's speech. Right? And then after the Powell speech, it's usually a resumption. It's a slow drift back to the highs. Awesome. Good job, Logan. All right. I'll talk to you guys tomorrow. Same time, same link, same everything. See you then. Bye bye.